Hello, this is Brian at Vacation Rental Bookkeeping. This is the first in a series of videos on the income statement for vacation rental owners using Xero. In this video, we'll be taking a look at how to view the income statement and talking about what exactly is the income statement. There are other videos in this series where we will talk about the individual parts of the income statement. We'll talk about how it can help your business, what it does not show your business, and then we'll also take a look at how you can customize the income statement to compare different time periods in your business and also split it up so you can look at individual properties income statements or booking sources income statements. Well, first, let's take a look at how to view the income statement. Now, one quick note is that each month I will send you a polished income statement that you'll be able to view and analyze. But in this video, what we're doing is showing you how at any time you can pull an income statement. If you want to see an income statement before I send it to you, you can pull it up anytime right here in Xero. And from the dashboard, all you need to do is go to the Reports tab and choose Income Statement. Once it pulls up the income statement, we will tell it to, I like to go to the Compare Periods tab up here. And then we will select the time period that we want to view the income and expenses for. Now, this is a sample company that I made for this demonstration, and for this company the data is back in 2016, so I'm going to select March of 2016, but you can select whatever month applies to you. In this case, we're going to look at a 1 month time period, and we're not going to compare any periods at this time, so I'm going to choose None. And we can choose Update. One other thing that I like to do personally, if you go to More Options, I like to sort my income statement by account code rather than account number. I'll show you why here in just a second. That's optional. You can do that if you'd like. So I'm going to change that to account code and then update once again. Alright, so we have an income statement pulled for this company, Mountain Cabins LLC, for the month of March 2016. Alright, so let's talk about what is an income statement. Now, first, let me mention that this income statement is set up using the accrual method of accounting, not the cash method of accounting. And we'll explain that a little bit more as we go, but it is important to take note of that. Now, the income statement shows the money that your business earned, not necessarily took in, but earned during a given period of time. It could be a month, could be a quarter, could be a year, or it could be some other customized time period that you set up, but it shows it for a period of time. It also shows the expenses that your business incurred, not necessarily paid for, but incurred during that given time period. Now again, this is using the accrual method of accounting. If we were doing the cash method of accounting, the income statement would show the income that you actually received and the expenses that you actually paid during that time period. But using the accrual method, like this particular income statement, shows the income that was earned and the expenses that were incurred, not necessarily what was received or paid for. Alright, so on the income statement, the first section you'll see is revenue. And you'll see the different revenue categories that we have set up for your business. Probably looks something like this. We're going to have rent revenue. And this is why I like to sort it by account code. If you don't sort it by account code, it'll put these in alphabetical order. And so cleaning would come first, and then less refunds would come second. I like to have the rent revenue up on top. That's usually the main thing that you want to look at. So I like it to come first, and if you'll sort it by account code, it will do that for you. So here's our rent revenue for March of 2016, $9,853.50. Now once again, this is the amount of rent revenue that was earned in March. So this is from people who actually stayed at your property in March of 2016. Now most likely they did not pay for that stay in March, but this is the rent that was earned in March. All right, let's say someone stayed in March, but maybe they paid for their stay in February. They put their deposit, they booked it in February and paid their deposit to you. The income on the accrual method would be shown in the March income statement, not the February one when they actually paid you the money, because that's how the accrual method works. In the cash method, it would have been shown on the February statement. One thing that I like about the accrual method is the fact that you can see how much money did my business actually earn using the bookings that occurred in the month of March. If you use the cash method, it's very hard to pull up that number because the cash method records everything on the day that the money was given to you. Now, the nice thing about the income statement here in Xero is you can see more details. We call it drilling down. So if you want to see the rent revenue that came in March, you can go over and click on this 9853, and it will bring up for you all the reservations that occurred in the month of March. You can see each one of them there. If you want to see even more details, you can click on an individual customer. So for example, we can click on Sam Robertson, and we can actually pull up his invoice. We can see he stayed 2 weekday nights, 2 weekend nights, he had a cleaning fee and a security deposit, and we can get the details. All right, we can click the back button, go back to those rent revenue transactions, and click the back button again, or up here we can click back to income statement and go back to where we were. So you can drill down into any of these categories and see the details. We'll look at the details of these categories in the next video, but in this one we just want to give an overall view of the income statement. So first category is revenue, and then we're going to subtract what we call cost of sales or direct costs. And these costs of sales are directly tied to your rent reservations. In this case, in this company, we have listing fees and merchant fees. Merchant fees would be credit card fees. So, for example, let's say you use TripAdvisor. When your guest books on TripAdvisor, they charge you a percentage listing fee for using their services, and that is directly tied to that reservation. If you didn't have the reservation, you wouldn't have that fee. That's a good test to tell whether something is called a direct cost. And so we list those and we subtract those from our total revenue to get what we call our gross profit. Okay, so gross profit is our total revenue minus those direct costs that are directly tied to our revenue. And so this company has a gross profit of $92.54 and 77 cents. The next section on the income statement are called operating expenses. These are expenses that your business has to pay to operate, but they're not directly tied to guest reservations. Okay, for example, the electric bill. You'd have to pay the electric bill whether you had any guests or not. That's called an operating expense. And you can see some other examples there. We'll look at those in more detail in the next video. One other note to just mention about the accrual method. For example, property insurance. We have an expense of $153.34. Now I happen to know this particular company didn't actually pay for their property insurance in March. Well, why is it showing up on the March income statement? This company actually paid for 6 months of property insurance back in January. But that amount they paid was a large sum, and it was not all used up in January. It was for the next 6 months. So what I, as your bookkeeper, will do is divide up that large amount that was paid in January and split it up between the next 6 months that it applies to, because your business needed insurance in March even though you didn't pay for it in March. So what the income statement does is show that you had this expense that applied to the month of March even though you didn't actually put out the cash in the month of March. All right, property tax is another example. Property tax you probably only pay once a year, but we spread it out throughout the whole year. If we didn't do that, what we would end up having is a huge amount under property tax on 1 month out of the year that would really throw off the numbers for that particular month. It would show very little profit, if any, because we had this huge expense that came. So what we do is break it up and split it up evenly among the months, and that gives us a better overall operating picture for your business. All right, we'll talk about some of the other details in the next video. The last section is called Other Income and Expenses. All right, for example, we have income from sales tax adjustments. This particular business, the local sales tax allows them to keep a certain portion of the tax they collect as kind of an accounting fee. So it's not really money they earned by doing business, but it is income for the business, so it's listed there. Interest is always counted as an other income or expense, and so this interest expense would be the interest on the mortgages for the properties for these vacation rentals. Interest income would be the interest on their bank account, their 5 cents interest. All right, then we can see the calculation here for net income or loss, and in this case it's $62.4406. So what we do is take the gross profit from up here, subtract the operating expenses. That left us with an operating income of $70.68, and then we add or subtract any other income and expenses. In this case it's mostly a subtraction of this interest on the mortgage, and we get a final profit for this business of $6,244.06 for the month of March. So that's the income statement, what it is. It calculates your business's profit or loss based on the earnings and expenses that are listed for that particular time period. So some keys to remember: the income statement covers a set period of time. In this case, it's from March 1st to March 31st, 2016. It's unlike the balance sheet, which shows your account balances as of one particular date. The income statement shows how well your business is operating, but not necessarily how well you are receiving and spending money, because this income here was not necessarily received in this month, but it was earned. These expenses were not necessarily paid for in this month, but they were incurred. For example, you may have received an electric bill in March, but you didn't pay for it yet. So it's showing up on here, but maybe it's not been paid for yet. It'll still show up on here. So it shows how your business is operating, but not necessarily how well you're receiving and spending money. In the next video, we'll take a deeper look at each of these categories and mention some others that you may see on your income statement that are not listed here. Thanks for watching. Hope you enjoyed it. If you have any other questions, check out the other videos or contact me. I'll be glad to help you.